Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, June 9th, 2010. Currency markets returned to risk appetite in today's session. As first, we had an unconfirmed Reuters report that said that China's exports rose about 50% in May from a year earlier to about $130 billion, up from April's growth rate of 30.5%, which highlighted that global growth led by emerging markets is still intact. The second main story from today, Fed Chairman Bernanke said that the economy will continue to grow at a moderate pace in the US with expectations of GDP growth of 3.5% over the course of 2010. However, that growth rate will mean a slow reduction in the unemployment rate, which will keep inflation subdued. While stimulus spending is due to wind down, Bernanke cites increases in consumer spending and increases in spending by businesses on equipment and software as factors that will sustain the recovery. Bernanke finished his prepared testimony to Congress by calling on lawmakers to begin laying the groundwork for tackling the record federal budget deficit. An entrenching U.S. recovery helps bolster investor sentiment, but the modest pace of the recovery, along with a stressed U.S. labor sector, means that the Fed will keep ultra-low interest rates perhaps deep into 2011. That should help carry trade, in which investors and banks borrow at a low interest rate, such as in the U.S., and then look for higher yields either abroad or in other asset classes. Commodity prices, like copper, rose for a second straight day, while oil rallied more than 3% in early New York trading. U.S. equities were higher to start the New York session as well, with the Dow Jones Index climbing above 10,000, though some of its higher gains were faded in the New York afternoon. The rise in commodities and equities helped to fuel risk appetite and quote-unquote risk-on trades. Let's start by taking a look at the Australian dollar-US dollar pair, which we can see extended its gains from yesterday's session, rising to a high of 0.8355 at around noon New York time. That had moved above our 100 period simple moving average, though came to resistance at our 200 period simple moving average. We can set up a short-term support trend line now after breaking our downward sloping resistance trend line, depending on where you want to place your though we didn't move above trend line if we connect the highs from our previous two highs here on June 3rd and June 4th. So we could see that level acted as resistance, and also if we plot a Fibonacci retracement, we can see that today's rally stalled at around the 61.8% retracement area, but if we actually measure from our high to low of our full swing, we see that we touched 61.8 perfectly. So we had a couple of factors lining up for this to act as resistance, and as US equities faded some of their earlier gains, we had the Aussie retrace part of this overnight rally. Zooming the Aussie dollar pair out a bit, we see that we are in a sideways trading consolidation currently with resistance below the 0.81 level and our support here at 0.81 and our resistance just above the 0.85 level. Currently we're in an upswing in this ranging action, so right now we are confined to these two levels. The middle part of this the middle part of this channel could be around the 8280 level, which was our supports back here in June 1st. And as we can see, that is currently where we trade. Taking a look at a couple of pieces of data from Australia, we see that home loans in the month of April were down 1.8%, which followed a decline of 2.9% in March. Also, the WMI consumer sentiment for June fell 5.7% following a 7% decline in May. So this shows the impact that the recent interest rate hikes by the RBA have on the Australian economy, both as mortgage rates are now higher, so that's reducing the demand for new home loans, but also it's filtering down into some weaker consumer sentiment. So actually following that release, we did have a little bit of a decline during the Asian session, but that just moved us to this support trend line, also our 50-period moving average, before we had our rally and risk appetite. Turning to our second main commodity currency pair, the US dollar Canadian dollar, we see a third straight day in which the Canadian dollar was stronger as it moved below the 1.04 level, testing support at 1.0363. And similar to our Aussie dollar pair, we saw some correction to the move in favor of our commodity currency in the late New York session. We had some choppy trading overnight as we stayed within a tight range during most of the Asian session and even in the European session, and then as we got into the beginning of the New York trading session is when we saw the big gains moving in favor of the Canadian dollar. Taking a look at the euro dollar, we did not have any bad news coming out of the Europe, and that gave it a chance to rally, extending this upward channel into a third session. As you can see, we had a bit of a triangle squeeze pattern here coming into the European session, and following the positive leak from China about China's exports, we had a rally, and that picked up steam in the early New York part of the New York session until we moved above the 1.2050. However, as New York stocks gave up their gains and actually turned negative prior to the close, we saw the euro move back below the 1.20 level. Plotting a Fibonacci retracement from our high back on Thursday to our lows on Monday, we see that we had moved to the 38.2% retracement of this full move, so a rather shallow retracement so far. We weren't able to reach 50%. And currently, we do move back down to this 23.6 area and likely to test at least this upward sloping support trend line. We'll see if this late bit of risk aversion carries over into the Asian session. And a look at the pound dollar pair. Here too, we had a rally overnight and in early New York trading, reaching a high of 1.46, at which point we were turned back, though the slide here was not as sharp as it was against the euro. This rally here helped the pair to move above its moving averages, but also some short-term resistance trend lines, one here, and a second one if we connected our highs here, which also corresponded nicely with our 100 period moving average, similar to what we saw with the Aussie US dollar pair. If we draw a Fibonacci retracement from our high back here on June 2nd at around 1.4770 down to our low at 1.4340, we see that we tested the 61.8% retracement, and that was where we turned back. So compared to the euro dollar, where we had a rather shallow retracement, this is a more standard 61.8% retracement, but so far unable to move above that level. In a final look at currency pairs, here we're looking at the US dollar, Japanese yen, and we could see that throughout most of today's session, we were stuck in a very tight range. I think this is about 30 pips, and we just broke below that in late New York trading as we had our dip in US stocks and we move into the US stocks actually moving into the negative, and so we broke below this 91.25 area, which as you can see we had tested several times throughout the session but were unable to move below. So we finally broke that, though we stay above our lows from earlier in the week. This is of course a sign of risk aversion, and we'll see if it undoes if this continues, if it undoes some of the risk appetite we had seen earlier today, but also starting in Tuesday's session. So that will do it for today's recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching today and wish you good trading.